All right, traders, tomorrow's going to be the final trading day of the week. With that being said, I'm going to prepare you to trade the best setups at the best prices heading into tomorrow so you can finish this week strong. I am going to show you exactly the key levels that we're going to be trading at heading into tomorrow, how to determine if it's bulls or bears that are in control of that level, when to be buying the calls or buying the puts, where to enter, where to set your mental stop loss, where to set your price targets, where to exit. I'm going to show you exactly how to scalp these options like a pro. We are going to be breaking down the SPY step by step, and this is going to give you a much better understanding on the best levels to be trading at and how to determine who is in control of that level and where to be buying calls, where to be buying puts. Let's get straight into the analysis. So these key levels that I'm going to be explaining to you are meant to be scalped very, very quickly. For those of you who want a better understanding of my day trading style, I would encourage you to watch the live stream that I posted. I ended up trading live on stream during the FOMC meeting, and that live stream is on my channel. Normally that's for Trader Society members only. And for those of you who are wondering about Trader Society, we are going to be allowing people to join from the public very, very soon. The announcement is expected to be within 1 to 2 weeks, end of December at the latest. I will keep you updated on that. So I would encourage you to go back and watch that live trading stream. You can also watch the shorts on my channel. Those are the live trading clips. I'm going to be posting a lot more content like that in the near future with the live trades. So let's get into the SPY, guys. I'm going to show you exactly how to trade the best setups at the best prices. So for those of you who've been following this channel, you are well aware that I mentioned this in several videos. I had specifically said at $410.97, there's a gap to fill on SPY. And in terms of SPY having its rallies from the lows, it tends to rally. It had about 3 rallies this year, 10%, 13%, 15%. It had about 3 rallies, and then it tends to top out at those rallies and it starts to have a reversal. And that's exactly what happened. And I clearly stated that if $410.97 reacts as a resistance level, which it did, how can you determine if 410.97 reacted as a resistance level? Well, right here, it had this massive spike on news, and you could see it had a breakout, but it ended up being a fake out, instantly collapsed, and look at where it was topping out. It was topping out at 411s, had a nice morning panic, selling off to 407, a big pullback. Where do you short? That level I told you. Previous support right here at 410, boom. Guess who played puts right here, and guess who made an 80% return back-to-back on puts? I did, and that was within the chat. I'm going to be making a video this week teaching that strategy step by step. For those of you who follow this channel, you are well aware of the gap close reversals, that #1 strategy. I prepared everyone within chat for this trading opportunity. Dimitri, one of our top traders within Trader Society, he ended up making $30,000 in 1 single hour, and he went with leap put options on QQQ. So yeah, big shout out to him, man. We absolutely crushed it on this day, and I've been consistently crushing it. And I'm going to continue to crush it within Trader Society. So let's get into the levels. Stay tuned for that video later this week. It's going to teach that strategy and recap that step by step. But in terms of tomorrow, this is what you need to understand heading into tomorrow. So in terms of tomorrow, we have a couple levels. This is what I want you to understand. Right now, in terms of our macro levels, so our macro levels, these are levels that are going to take a little bit longer to hit. In terms of the macro levels that I'm addressing, this is where SPY can have a reversal. So in terms of your macro levels, there's a gap to fill below at 374.13, and there's a gap to fill above at $399.40. Set your price alerts at those 2 macro levels. That is where SPY can have a reversal. That doesn't mean that it's going to have a reversal. That doesn't mean when the gap fills that it's not, that it's, going to have a reversal. What can happen is the gap could fill and it can keep going the same way it came from prior to filling the gap. But then within time, if it reacts as a reversal, you can play off of that key level, right? So that's what I like to do. So in terms of reversal levels, 374, wait for it to show signs of a reversal, meaning it's bottoming at support, it's holding, it's starting to bounce, it's starting to break out, it's looking bullish, it's forming a floor. Whenever that occurs, that is when you buy with confirmation. Same thing for 399.40, except the inverse, puts. When you see it react bearish at 399.40, that is when you play the puts, right? So in terms of key levels, interested in puts here, interested in calls here. Now it must react how we want it to react. It must show signs of a reversal. So you must be competent enough to determine how a stock can have a reversal, right? So once we determine that there's a floor here, it looks bullish, that's when we buy the calls. Initially, it might not react that way. So if it doesn't react that way, we don't do anything. but we wait and we reset that price alert. And when that price alert triggers again, if it reacts the way we want it to, then we get in, right? So those are your macro reversal levels. Now, heading into tomorrow, what I want you to understand is this. SPY is gapping down. SPY is gapping down. It's at $388.10. It's having a fairly nice gap down here during future hours trading session. It closed at 389.63. So your first key level, this is going to be your more higher make or break level for put options. Think of this as a resistance level, 389.63. That is going to be your key resistance top of the channel level tomorrow, $389.63. It's gapping down, and that is what we call the previous closing price, which is one of my always key levels to be trading at. Not all previous closing prices are created equally, which is why you must use the daily chart. Obviously, if I'm buying put options, the most competent previous closing price level to buy puts, and this is something that I banked on twice for a back-to-back like 80% return, was right here at $410.97. We're at a much lower level, so you just got to understand that. However, this is going to be a great opportunity still. So our first level heading into tomorrow, and I want you to think of this as a higher top as a resistance level, $389.63. Previous closing price, gap to fill above for a potential reversal. Now, what is the significance behind this level looking at the daily chart, right? So this is what I want you to understand. Look at this. This is $390. It nearly closed at $390, right? So this is a key support level. This is a very interesting support level. We had a lot of support on the SPY at $393.50. That's another key level for next week that we're going to be studying, $393.50. If you ever see SPY rip back up to $393.50 initially and it reacts bearish, you scalp a put very, very quickly, hold it for like 5 to 20 minutes, boom. 20%, 30% on same day expirations. If you don't want to do same day expirations, you go to further expiration, pay more for the contracts, put more equity in, and make less of a percentage return. It's your style of trading. Less theta decay, more equity in, less percentage return, but the equity can help make up for that. It all depends on your trading style. But yeah, so $393.50 when it hits that initially, so only the first time, you can play puts. If it looks bearish, it's showing signs of resistance. 383.63 will be our key level for tomorrow. So this is interesting. You have this floor at 393.50, it cracked through, and then you have this next support level on the daily at $390. Now, if you look right here on the daily, there is no support on the daily basically until all the way down here, which is at this 385.64 level overall. That's your next overall support level on the daily that I would say. So what I want you to understand is previous support is reacting as a resistance. And for the bears to show true strength, which they already are because it's gapping down, but for them to continue to show true strength into tomorrow, they need to stay under the previous closing price. They need to turn 389.63 into resistance. They need to turn this 389.63 to 390 level into a resistance. If you see it go green and it goes back red and it's looking bearish, play into that. Play into that green to red move on puts if you see that occur. What would be the targets? First target would be right here at 387.89. If 387.89 cracks, then it goes to our lower end of the channel. Our lower end of the channel is 385.64. Now, this is a very special level. I want to explain to you on why this is a very special key breakdown level. So if we go a little bit further back, a big move is going to occur. Let me explain this to you. Right here, the SPY, it topped at 388.63. Today, it closed at 389.63. You see the similarities? Look what happened. It sold off to 375. There's a gap to fill below at 374. A major move happened when this 389 to 390 level reacted and confirmed as a resistance level. A major crash happened to the downside. Now, if it breaks above 390, and it goes red to green tomorrow and it stays green, it's looking bullish, it's popping above 390, it rips above 391, then the inverse is going to happen. Instead of that big move to the downside, it's going to have that big move to the upside. And that big move to the upside would be 393.50. If it breaks out and goes above 390, it rips to 393.50. If 389.63 reacts as a resistance level, it's going to go to 387.80. If that cracks, we go to 385.80. Now, this is significant. The reason why this 385.80 support level is so significant is because it's called a gap breakdown. Will, what is a gap breakdown? What you do is you find a stock that gaps up. So, SPY, it opened up higher than it previously closed. It gapped up. Once the market closes, you take the low of day. The low of day is at $385.64. When it goes under this, why is this so significant? The reason why it's a significant level to short as a key breakdown, and it's a special key breakdown, is because there's no support. It is held up on thin air. If you visually look at the daily chart, this is an empty space. There is no support. So what's going to happen is when it goes under, if you see it go under 385.64, it reacts bearish. It starts going under 385. It's forming resistance. It's looking bearish. It's forming lower highs. Your bearish confirmations are triggered. It's a confirmed resistance level. Then it's going to start to fill the gap. It's going to start to fill the gap because there's no support. And that's not the only reason why it's special. It's also special because it recently had a very major move. It reacted at 389 resistance and it sold off all the way to 375. And there's a gap to fill below at 374. So there's going to be a major move. There's going to be a major moves are going to occur at these levels that I'm giving you. A crazy move is going to happen at $385.60. Another crazy level is $389.63. Another crazy level is $393.50, right? So what are the best possible levels to be trading at? I'm going to give them to you right now, right here. The higher, the better for puts. The lower, the better for calls. $399.40. That's a macro reversal level where you're put focused. $393.50. So what is this level? This is where you can initially try scalping a put, and you would do that if it looks bearish, confirms resistance, and if SPY breaks above 389.63, it goes green, it stays green, it's breaking above 390, it looks bullish, then you wait for 393.50. That's what you do. Now, this is your lower level. This is more of your previous support that's reacting as a confirmed resistance, and it's gapping down. 389.63 is the previous closing price. If that reacts as a resistance level, you're going to see a hard sell-off for an attempt to crack yesterday's low at 387.89, and that's going to drop to 385.60. If 385.60 cracks, it's a bloodbath. If 385 holds, it rips back up towards that previous closing price and it starts to go green. And if it stays green, it rips back up to 393.50. And then we have our lower gap level at $374.13. So your best, most competent levels to be trading at tomorrow, again, $399.40. So that's really not going to hit tomorrow. So save that for the future, but anything's possible. But in terms of tomorrow, if the previous closing price reacts bullish and it reacts as a support level, it's going to be on track for 393.50. That's where you can try puts for initial reaction. 389.63, if that reacts bearish, you play the puts at the previous closing price, the green to red move, ride it back down to the profit target of 387.89 to $385.64, right? You scale out into the dips, not into the rips on puts, and then you do the inverse with the calls. And then this is your make or breaker level. So I will say this as well. Initially, what likely can happen is, and what likely will happen is, we will likely see a bounce off of 385.60. I would be a little surprised if it didn't have a small bounce towards this like 385.60. And if 385.60 does hold, just understand what's going to happen is it's going to go back to yesterday's low. If 385.60 holds, it's going to rip back to yesterday's low, which is at $387.90. 388 you can call it, right? So if 385.60 turns into a support level, it's going to rip back up to yesterday's low. If that reacts as a resistance level, it's going to really try to crack that low. If that reacts as a support level, then it's going to try to go back to the previous closing price. So your key main levels, 393.50, 389.63, 300 and yesterday's low 387.89, 385.60, and then if you ever see 385.60 confirmed, so initially I think it's going to bounce initially, but it doesn't matter what I think. It matters how the market reacts to my key level, and if it's a confirmed floor, then calls. If it's a confirmed roof resistance, then puts, right? But if you ever see 385.60, if you ever see it react as a resistance level, then you play the puts and ride this sucker down. But don't be a fool and get squeezed. Understand, this is a level where it can have a very nice bounce and a very nice reversal. So it has to react bearish. It has to form resistance. It has to, react to bearish. And then if it starts to go against you, you got to get out, right? So in terms of risk, I don't risk too much on these. I'll risk like 20% max. In terms of my trading style, I trade 0 dates. I trade 0 date expirations. You have to be a professional and know what it is that you're doing if you're going with 0 dates. If you don't know what you're doing, or if you don't like that super laser speed, you gotta have the platform set up. You have to know how to enter perfectly. You have to trade differently. Like if you watch my live trading streams, you will see that I was literally getting the best entries possible. I was playing puts on SPY at FOMC. If you go back and watch the live trading stream, I also uploaded in a short. On FOMC, I was buying puts right here at the exact top before it flipped bearish. And people tell me all the time, don't do that. Don't do that. Wait for it to drop. Wait for it to look bearish. There's certain ways where you can already confirm it's bearish. So when it hits the key level, you just get in. You just get in on the green candle. I know that sounds weird, but my entry is going to be 100 times better than the person who waits for a more bearish signal. But there's a way to already confirm that it's bearish. That's what I'm saying. And I'll get the best entry possible. And for the person who gets the entry below me, they have a terrible entry, which means they have a terrible risk to return ratio. And if SPY rips back up to that key level, they get stopped out while I'm at break even. So it's like, who do you want to be, right? Do you want to get stopped out when I'm at break even? Or do you want to be in that situation, where you're already up 20, 30%, where the other guys break even or down because it's such a bad entry? There's tricks to options, man. That's why the thing with these videos, man, it's like you have to see it live. There's no other way to explain it. Like you have to know what you're doing if you're trading options with these key levels. There's a way to do it. Out of money, in the money. There's so many little tricks. That live stream can help open your eyes a little bit with some of the tricks to options. But I'm telling you, it's like the smallest details. Like think about like theta decay, out of money, in the money, all these little tweaks. Like if you can really sharpen an edge if you know what you're doing with options, and you can really use it in ways to minimize risk. But there's just these weird tricks you can do with it that most people don't do, and that's what leads to the success. It's literally those small little tricks. It's not some special indicator or confirmation. It's just knowing these simple things that most people aren't doing and most people actually disagree with. So yeah. So just to be very clear, if I see 389.63 react as a resistance level, I will be playing puts. If I see 393.50 react as a resistance level, I will be playing puts. If I see 385.50 react as a resistance level, I will be playing puts. Now what you need to understand is the lower the level, the more risk you are of getting squeezed, right? So you have to be extremely careful if you're going with lower levels, and you have to get stopped out extremely quickly and know what is it you're doing. And you have to get perfect entries and perfect timing. So yeah, those are just all things I want to bring awareness to. And initially it should bounce at 385.50. That's what it should do. What I want you to understand is in terms of initial reactions, they tend to have little small reversals. I see it happen all the time. So this is a key support level that hasn't been hit, this 385.50. Initially, it should have a small reversal. Now that doesn't mean that it's going to flip super bullish. But if it has a small reversal at 385.50, what it does mean is it's probably going to spike to at least yesterday's low, which is at 388. And you don't want to buy puts here and get squeezed to 388, right? So you have to confirm it's actually bearish. What I want you to write down is one tip, and I was talking about this in the live streams. This is how I was literally trading. When it hits a key level initially, I see it happen all the time. Not all the time. I see it happen a lot. It's not going to work all the time. But if you're using my strategies the right way, when it hits a key level initially, it tends to have little reversals. So what I'm telling you is it's very likely to see a nice small bounce at 385.50 initially. But once it reacts bearish, then you can play the puts. But initially, it's very likely it does bounce there. Same thing at 393.50. If it hits 389.63 or 393.50, I think initially those can be moves for puts very, very quickly. I'm talking like super quickly. I'm talking like say it hits 385. Boom, 385 calls initially, quick pop to 386, 20-30% gain out like that. Say it hits 389.63. Boom, 389 out of money puts, Now they're in the money. It drops $1, quick gain, 20, 30, 40%. Say it's 393.50. Boom. 393 out of money puts. It drops under 393. They're in the money, quick 30% gain, right? Initially. Now that does not mean that it's going to have an actual full reversal. It could have an initial move where you can make a 20 to 30% return buying puts or calls that are barely out of the money within minutes. I'm talking about within minutes, a 20 to 30% return within minutes. Watch my shorts, watch the live streams with my entry and what it is that I'm talking about with these initial reactions, short-term little 5-minute reversals. You can make a 20 to 30% return on 0 days. It's fucking crazy. Now that doesn't mean that the overall trend's bullish or bearish, but what I'm telling you is it is highly likely to see laser scalp opportunities where if you know what you're doing, you have your broker set up where you click one button and you get filled. It blows my mind. These option traders ask me, well, how do you get filled so quickly? Well, I have my broker set up in a way where I push one button or one hotkey and I'm filled instantly. I'm buying above the ask, I'm selling below the bid, or I'm using a market order. You should be using a market order if the spread is thin on SPY. Obviously on an FOMC day, you don't want to use a market order if the spreads are more wide and more volatile. But for the most part, market orders are fine if you're trading the SPY, the most liquid option chain available, right? But you don't even have to do that. You could just be set up your platform the right way, not use fucking Robinhood and buy above the ask and sell below the bid. Instant fill. You pre-fill out your orders. Everything is pre-filled out. All my plans are pre-filled out. If you're not set up in a way where you click one button and you will get filled, then you are going to fucking lose and you're not going to be able to scalp like a sniper, right? I'm talking about these small little micro reversals, right? And I'm giving you the levels. 399.40. When 399.40 puts go out of the money, boom, 399 puts back in the money. 393.50. When 393 puts go out of the money, boom, buy them out of the money, boom, back into the money. 389.63. 389.63 puts go out of the money, right? Now, initially, that's what should happen for a small move in our favor, but you do want to use confirmations in certain situations. What I would say is in terms of confirmations, less relevant if it's at a very high level. For puts, less relevant if it's at a very low level for calls, right? So in terms of this whole idea of like, just getting the best entry at the key levels when they're barely out of the money and not even waiting for like a reaction, in a sense, like what I did with SPY when it was at 403 during FOMC meeting, you want an overall macro trend in your favor, but like in a sense, yeah, macro trends are important. It gets more advanced. Macro trends are important in a sense. Another thing could be is, you can use confirmation within just 1 minute, but on macro levels and just studying option contracts, studying the volume, there's a lot of other key indicators. I go over all this in my live streams, but those are the key levels, guys. So I hope you enjoyed this video. I'm going to wrap it up here. Those are going to be the levels that I'm planning to trade at. Just understand, if you ever see this react as a resistance level, it breaks down, reacts as a resistance level, it's going to get crushed and start to fill the gap. The gap is where it can have that reversal, right? If you see this bottom out here, it's going to go back to yesterday's low. If it tops at yesterday's low, then it's going to crack and start to fill the gap. That's what's going to happen. If it breaks above yesterday's low, then it's going to fill the gap. If it fills the gap, then it goes to 393.50. If it reacts as support, if it reacts as a resistance, then it goes to 387. If 387 cracks, then it goes to 385.50. If 385.50 cracks, then it starts to fill the gap at 374. This is all simple stuff, man. So like I said, my final levels that I'll be watching tomorrow are going to be 399.40, which is more of a macro level, not going to hit tomorrow. 393.50, 389.63, yesterday's low, which is 387.89. This level, very important, this 385.64 and 374. Those are the most competent levels to be scalping and to be trading at. Initial reactions, meaning the first time it hits that level, not the second, third, fourth, fifth time. The first time is where the best trades will typically be made. Or the second time, you can do it the second time as well. First and second time. First and second time. It depends on the trading level and it depends on the strategy and the confirmation. But yeah, that's overall going to wrap it up. I'm absolutely going to crush tomorrow. This should be a fairly easy day. I'm seeing my levels. Only trade at those levels. Understand the higher the better for puts, the lower the better for calls. Don't fight the trend. Don't fight the reactions of what the market's telling you. Do not blindly hold, right? Get out quickly if it's going against you. Get in at the best levels.